for Black investors. Of all the money in venture capital that's poured into entrepreneurs over the past about 6 years, that number has oscillated from about 0.8% up until a high of about 1.3%. And if you think about the total bucket, again, 0.8 up to one to a high of 1.3, and that's for Black investors. You see similarly very low numbers for Hispanic investors. Why is that significant? Well, if you just look at just the population in the United States, Black folks make up about a little bit more than 13% of the population, and Latinos make up about 19% of the population.
Welcome to the Feast Over Famine podcast. On this podcast, we're navigating the tension that we find where mission and profit collide. We're talking to CEOs, founders, executive directors, impact investors, and all of what we've identified as the global ecosystem of the social enterprise, business for transformation, business as mission landscape. We're talking to them about the obstacles they face, the strategic challenges they've been through, how they're funded, how they were started, and everything that's happened in between. We are trying to share their story in a way that's impactful to help us all to grow the social enterprise space for the better. Enjoy this week's episode with your host, Ryan Mahaffey.
All right, everyone. Welcome to another episode of the Feast Over Famine podcast. Really excited you guys are all here listening, and I have been really excited for this episode. I'm excited for a lot of episodes, and every once in a while, some slip through with a conversation that I haven't been able to have on the podcast, and quite frankly, I don't get to have often. And so today we've got Derrick Kelsey on the podcast, and I'm not even going to say where Derrick's from or his organization, because I feel like we're going to talk about so much, and he's going to share multiple organizations. But I got introduced to Derrick through an organization called Issachar Center here in Colorado and Denver. He can share a little about what they do if we get there. But we had this amazing conversation and around diversity. I'm trying to think the best ways to say it, but around diversity in impact investing and in venture capital and what that means. And man, it's just something that I've wrestled with and I care deeply about. And Derrick is a expert of it. I would say an expert in it, blending what I would say grace, mercy, and justice, and a cool heart for this. And so I've been just excited to have this conversation and excited to share it with you guys. So Derrick, welcome to the podcast, man. I'm looking forward to this.
Yeah, thanks for having me. And I'm excited as well to enter into this conversation, and especially to have it with you.
Yeah, totally, man. And even as we were preparing, I was like, man, what language do you use on this, or how are we going to approach that? Because I'm like, so I'm here to learn too, and it's cool, it's fun. So, man, Derrick, why don't we start here, because we're gonna unpack a lot of stuff. Give us like a 3-minute just background on you, like where you're from, who you are, what that looks like, what you've done kind of career-wise up to this point, some of that stuff. Give us that little bit of a background so people know where you're coming from.
Sure. So I am originally from Birmingham, Alabama, born and raised, went to college at University of Alabama. So yes, I am the stereotypical big football fan. I was going to tell you, I was like, if you want to make this evergreen content, then I could just say, yeah, Alabama's poised for a great season. And you can play this in 20 years and it'll still be true.
Okay. All right. Listen to you.
Yeah. But yeah, after college, I went to work as a IT software consultant for a couple of years. And then I got married, quit my job, and moved to Dallas to go to seminary. And after graduating from seminary.
What seminary did you go to?
Dallas Theological Seminary.
Okay, cool. Yep.
And so after graduating seminary, still trying to figure out what I wanted to do when I grew up. So in the meantime, I went back and did some more IT consulting. And then I had a friend of mine who I met in Dallas who had moved up to Denver to go to seminary at Denver Seminary, asked me and my family to come up and help him to start a church. So we moved up to Denver to help plant the Embassy Church. And I was doing that. And a couple of years in, and just seeing how the financials at the church was going. Just recognized that I was going to need to go back bivocational. And so I did that and got back into doing some software consulting. About last year around this time was getting to a place where I was looking to do something different and open to even a career shift on the occupational side. My vocation still is the same in terms of just really feeling a heart for the city. I was presented with the opportunity to connect with an angel investing group that was looking to start a fund to invest in underrepresented populations. And that really intrigued me. And so I dove head in to start getting myself up to speed on the venture capital investing and early stage investing entrepreneurs, and have just completely immersed myself in that world. And now am going to be a general partner in a fund that we are beginning to raise for investing in Black and Hispanic entrepreneurs in the early stages of their company. So really excited about this new opportunity and this career shift and diving into this new world.
Totally. Yeah. Awesome. Okay. So thanks for that overview, because I think church background, business world, not business world, kind of starting a new venture, all this kind of stuff. Talk a little bit about RVC and how that plays into it, just for people who don't know, and the relationship there, because I do think, although you're kind of doing this thing, like they're a really cool, powerful network here in Colorado that I think really cares about good, and they've really kind of challenged things and stepped out. And so I think we don't have to go super deep on that, but I think knowing a little bit of that would be helpful.
Yeah. So RVC stands for Rockies Venture Club, and they are an angel investing network that's been around since really the 1980s, but started doing some things more formally in the 90s. And it has effectively two arms. One is more of an educational arm where they work with angels to show them or bring people into the world of angel investing. And so they host some classes and some instructions on that, as well as doing pitch coaching and even some what they call hyper accelerators, which is these week-long condensed times where you're working with entrepreneurs to help them refine their product, refine their vision, think about their marketing strategy, various different things like that as well. So RVC has that educational arm, but it also is a network of investors. And so there's a process by which entrepreneurs can apply to have bring their pitches in front of this group of angels, and they take them in, do some pre-qualification, and on a monthly basis, we'll invite several of these entrepreneurs to pitch to the angels. And then the angels will receive those pitches, and then they'll huddle up and decide, what deals they're interested in investing in, who wants to lead the round, who wants to follow on. And then there are also some folks that come together and do the due diligence on these deals, and then they'll create a SPV or special purpose vehicle so that the entrepreneurs just have one name on the cap table. And they've been investing like that again since the 90s. About 7 years ago, they launched their first fund, which was a $5 million fund called the Rockies Venture Fund, where they more formalized this process. And just last week, they launched 3 more funds as we're becoming more of a family of funds. One being the one that I'm a part of, which is Rocky Seed Fund for investing in Black and Latino entrepreneurs, as well as have 2 geographically based funds, one to invest in entrepreneurs in Wyoming and another to invest in entrepreneurs in New Mexico because of some of the regional synergies that we have and the network affiliations with other angels in these areas.
Yeah. And it's just cool to know that if you and I were just sitting here having this conversation, we had no network, we had no groups of people, no power, no money, any of that behind it. It's kind of like, oh, okay, what are we going to do here? It's cool when a large entity with influence says, we're going to do something about this, and steps up. I think that's, and so that's part of the reason I wanted you to share a little bit about what they were doing. So, all right, I'm going to give us a little bit of a framework for our conversation here. And I think it'll be helpful. So I kind of see like 3 buckets, and there's some statistics we want to talk about. There's some history we want to talk about, some philosophy that we want to talk about. There's a lot of stuff. And so one bucket is founders and entrepreneurs, Black and Latino, Hispanic founders and entrepreneurs. one bucket is the capital available and going to those founders and entrepreneurs. And the other is the representation of those communities in the capital pool, like the actual capital that's out there. And I think that there might be some segues, but I think those are kind of the three buckets that we want to talk about today. And I think for each of them, we want to talk about what is that bucket, what is going on there, a little bit of why is that going on there, what the progress has been and is going on, and what the future hope of that looks like. And so just as a little bit of a framework, we don't have to stick perfectly to that. I'm going to kind of go through there. And so let's start in just the founders and entrepreneurs, and let's just start talking about like statistically why, I mean, and this sounds like a crazy question. That's the whole point of this conversation, but like, why is it important for us to focus on Black and Latino Hispanic entrepreneurs? Give us that baseline of what's going on there.
So there are, in private equity, there are trillions of dollars, trillions with a T, from venture investing as well as hedge funds that are poured out from individuals who are looking to get some significant return on their money. And when you look across that landscape and see, well, where are those dollars flowing into? Who are the people? What are those companies that money is flowing into? When you break it down by ethnicity, Black and Latino entrepreneurs get just a significantly small sliver of those dollars. So just over the past couple of years, for Black investors, of all the money in venture capital that's poured into entrepreneurs, over the past about 6 years, that number has oscillated from about 0.8% up until a high of about 1.3%.
Of the total bucket.
Of the total bucket, again, 0.8 up to a high of 1.3. And that's for Black investors. You see similarly very low numbers for Hispanic investors. Why is that significant? Well, if you just look at just the population in the United States, Black folks make up about a little bit more than 13% of the population.
Yeah. Yep.
And Latinos make up about 19% of the population. So if you just kind of just take those two groups and add it together, you're talking about, at this point, a third of the population. But if you have a third of the population, but within that group or that community, they're only getting less than 2% of the money, then that should raise a question. Like, well, yeah, some things there. Well, I don't know. I don't want to jump to say something is wrong. The first thing I want to say is, hey, there's something off in just terms of the numbers. Yeah. If everything was quote unquote equal, then you would think that there would be representative amounts.
Totally.
That are there. Now, so there are reasons why that is the case. One of the reasons that people present is that, well, yes, Black and Latino make up such a large percentage of the population, but they're not bringing deals, or they're not entrepreneurs in this space.
Yeah.
But if there's been several studies that shown over the past couple of years. So there's one study that was looking at entrepreneurs of people who were in the process of or starting businesses from 2014 to 2018.
Yeah. Yep.
20% of the Black population was either starting or in the process of starting a business, compared to 12% of the white population.
Now, can I ask a question in there? I'm just curious, like historically, so like that was 2014 to 2018. Let's go back. If we looked at that same study over a 50-year period, my hunch is that number's grown for Black and Latino populations. Is that fair? I don't know. I guess I'm asking.
So like the venture spaces really goes back to maybe the 80s.
And I'm just talking about like starting a business.
Well, I think that number probably would be higher if you go back to the days of Jim Crow and segregation, because of the way that the populations moved. So, I'm from Birmingham. my parents grew up in Birmingham, and just as segregated as society was, like if I wanted to go to the barbershop, I couldn't go to Floyd's. There was no Floyd's, that type of thing. I would have to go to a black barbershop. Or if I wanted to go to a restaurant, if I did go to a restaurant, I was potentially could only stand at the lunch counter. I could not be seated at a particular place. So entrepreneurship grows out of oftentimes of people trying to solve problems. If I need to get my shoes fixed, if I need to shop for clothes, if I need to get my car serviced, and I can't go to these particular proprietors because of some either codified issues or just socially, it's not going to go well for me. If I go there or I cannot get service, then I would say there's probably a higher percentage of folks, especially in the Black population specifically, who were starting businesses because the needs were greater because you could not access those goods and services universally.
That's interesting. Well, and I guess also like an interesting thought that comes to mind for me on that is then a lot of those businesses you were just mentioning, a restaurant, a barbershop, like those aren't high capital intensive businesses. And so even though venture capital was a thing, might not have been a thing, it's a newer thing. It's different than saying, hey, I've got this tech product. I want to start it and it's going to take me 2 million and then another seed round and different things. And so that's even interesting. Like, okay, there was a high level of entrepreneurship to solve problems that were big problems, but small in terms of capital needed to solve the problem. Therefore, the capital piece didn't have to keep up. And so, if you've got a population doing those things, that's interesting. It almost like keeps the thinking small out of a survival. Like, oh, well, I need that. I need to get my hair cut. I need to get my shoe fixed. Like, so the problem I'm solving is here because of that. And therefore I'm not working on this problem that might be out there. Sure. And so it just creates another level of that kind of happening.
Yeah. So when I'm looking at this, I see it from two ways, because I think it's fair for people to say, well, I provided that stat around Black entrepreneurs. And also, if you look, I think over the past decade, over 50% of net new businesses were started by Latino entrepreneurs. Wow, that's a large number. Yeah. But then there's a question, well, but we're talking about in this venture space. So we're not just talking about people willing to start businesses. We're trying to get people who want to start businesses that can scale to have like $1 billion in revenue. So hey, that's cool that there's that. But to the point, I think that you're uncovering is the first thing you got to have is the entrepreneurial spirit. And I think the misnomer of there aren't enough entrepreneurs to invest in, I believe that's a false flag, because when you have populations that have that idea that, hey, we're willing to start something, that's a bigger leap than, can I start something that can grow really large? Because again, if we're in a society that it's typically, hey, I want to get a job, I need somebody to pay my salary, and that's what
we're already working with the smaller statistic that has not just the entrepreneurial spirit, but the entrepreneurial drive and I don't know, stupidity, even go try.
Exactly. Yeah. But if you have from both of these communities, if you have that entrepreneurial spirit, it's less of a step to get from there to say, all right, let's think about these big problems. But to your point of not being able to even think or imagine that this is a thing that is even accessible for me. Yeah, I just think about my own, and just in my own journey. Like typically the really radical or the things that come out of venture, some of those new and exciting things, we see those from at the point where they've been productized. So, hey, there's this thing called Uber. How cool is that? I get to call a car and move around and do some different things with that, but not appreciating the fact that there are people who were able to invest in Uber before Uber was even a public company. Yeah. And to even have the understanding that there will be people who will write you checks, not alone, but a check of investing in your business, understanding that that business has a very large percentage chance of going to zero.
Yeah.
That type of capital is out there. So typically as entrepreneurs, the idea is, especially coming from these communities, is how do I get funding for this idea? If you don't have a lot of funding sources within your family or people you're not related to or in close proximity to some high net worth individuals, the idea is I got to get a loan. So you're only thinking of the debt equity, the debt side of financing, which can create problems and complications as well. In terms of like, hey, I don't want to obligate myself to anything else. So this idea that there's this pool of money out there that you can access where people will invest in your company, understanding that you may not ever be able to give them a return on their investment. And if the thing goes to zero, it's not like, but I still owe this money. That idea is not something that is really prevalent or even understood within those communities. So in terms of building companies or trying to solve problems that require that kind of money, if you don't even know that's out there, that puts a shelf or a ceiling sometimes even on your thinking.
And what's part of the root of why that's not even, why is that shelf there? Is that shelf put there? Is that shelf historical? Is it generational? I mean, like the shelf is there. And I want to focus, you do too. I want to focus more on like, okay, we're blowing the shelf off and there's a future here. But I think understanding the root of that is helpful. Like, why is that? And the flip side of this question, the other question I've written down here, so I'll give you both of them. Why is the shelf there? The second question I had is like, what is so uniquely special about Black and Latino founders that is so special and unique and different that makes them successful entrepreneurs? As an example, when I was helping get blind, visually impaired folks employed, someone who's blind or visually impaired, they don't have that sense. Their eyes they can't see. And so they got to listen. They got to listen to how someone interacts. They got to do things. And so they actually, if you have a diverse team, a diverse portfolio of founders that have different skill sets from different walks of life, that's a healthier environment, a healthier, more successful business model. And so I guess the first part is like, why is the shelf there? And then once that shelf's blown off, like what makes that community special? Like what's different and special about that we can celebrate and should want to invest in on that?
Yep. So I think if you're, depending on which community you're looking at, I think the reason for the shelf being there is maybe slightly different. When you're coming from an immigrant community, because of this type of investing is so relational, if the people that you're related to, people that you're in community with, don't have those types of resources or are not connected to those types of resources, then you're not going to know that they exist. Or if you know they exist, you can't tap into those networks because, again, you're talking about with banks now, there are regulations about who they can and what things they have to consider when lending out money. Historically, there were banks who would be discriminatory in terms of who we're going to lend to, who we're going to capitalize for these types of things that can help grow your overall net worth. But now there are regulations for that. When you're talking about private dollars, there's no regulation against that. It's like, hey, you can't force me to write a check into your business. It's, do I want to? And so if I don't have any kind of network, any kind of connection, there's nothing that lubricates and gets me past that friction of how do I get to that money?
Totally.
Secondarily, just thinking from the Black community, there's, again, when society was segregated and you had these Jim Crow laws, it was like that puts a cap even on some of your ability to grow your own personal net worth.
Right.
And having some of those caps on that and the ability to be able to grow your personal net worth, that limits now when it's time for, say, hey, we want to start these businesses, even having Black folks on the capital allocating side, some of that was choked out just from some of the limitations that were there.
Well, or is like one of my, we talked about this last time, back in 2015 when a lot was happening, just in the conversation around racism in America, like one of the things that hit me upside the head, and I'll share this from my perspective, is like generational wealth building. I was like, okay, my grandpa was a white businessman that came out of the Depression in the 40s and went and started a business entrepreneurially. And he was able to do that. Therefore, my dad had an opportunity to work in that business. And therefore I had money to go to college. That was it. And so I think, so then that one, just in terms of like opportunity in that sense, I don't want to dilute it to just, okay, that meant I had an opportunity that someone else didn't have. There's a balance between pull up your bootstraps and recognizing that. But I think just as you talk about allocations of capital, that's just generationally, then you have access to wealth in a different way. And I think for me, when that hit me, I was like, oh my gosh, like I've been seeing this all wrong. Like I just totally didn't even comprehend the impact that some of those historical things had on that. Now there's a flip side of saying like, okay, we don't need to just like live in that rhetoric and just say like, okay, woe is me and sit there. We need to do something about it, which is what I love what you're doing. But that's a reality. And I think plays into that.
Yeah. I think what you're speaking to is those levers. And so I just think about, since I've been here in Denver and seeing some of the neighborhoods that were traditionally redlined. So
yeah, can you just, I don't know that everyone on our podcast can understand. I was going to say it a minute ago, red line. I was like, yeah, property. Could you give a quick red line definition?
So banks historically would code certain neighborhoods and would use different colors, green, blue, what have you, to say, hey, these are desirable places where we want to lend money to folks for buying and purchasing property. And these are some areas that are not desirable. And so we will lend to folks in this area, or we won't lend to folks in this area, or we'll lend to folks in this area, but there'll be some discriminatory thought processes that go into it. And so in these cities where you had segregation, there were neighborhoods where if I was, as a Black person, wanted to get a loan from the bank, they would not give me a loan for example, to buy a house in Cherry Creek. But I could get a loan to buy a home in the Five Points neighborhood. Difference is the neighborhood, the value of that land was not going to be as high. You have highways near the airport. It's just a suboptimal property place locations. And so I guess the lever in this was, especially coming out of World War II, where you had all these guys returning from fighting in the war, these veterans, and you had the GI Bill, where the government was providing some subsidies to help these folks get houses, and this was a huge boon and help to the expansion of suburbs. And the way most people grow their net worth is through their house.
Totally, yeah. I mean, I think everybody.
Absolutely. But here you had this huge government subsidy that was going to these folks coming back from the war, including Black soldiers. But Black soldiers could not buy and purchase property in some of these suburbs, given, we're still living in a segregated society. And so you're able to start growing these houses in one space, and the value of the houses in these other neighborhoods, in these red line areas, the houses were not growing in value, or not nearly as quickly. But you think about, as generations progress and, you pass your house down, or you're able to sell that house, and now you take the capital from the appreciation of the house and to do other things with it.
It goes into a trust, and then that person takes it, or a will, or just an estate. And then you say, oh, I'm 35, I'm 45. My one person says, okay, my 5 Points house of my grandfather that I now inherited, that we sold, is worth $100,000, and the Cherry Creek one is worth $1 million, and it's appreciated. Oh, well, I'm 40 and I've just inherited this $1 million. I'm going to go and invest it. Absolutely. Oh, who am I going to invest it in? Oh, well, who's in my network? And so now we're talking the flip side of that. Okay, now I have $1 million to invest in my network, and it just bubbles. Yeah,
it could absolutely bubble. Or it could be something as simple as, I have some money to be able to give my kid $10,000 for a down payment on their first house. And now that's a lever. Or I can take money out of the house to pay for their college. And that's a lever, versus me having to get student loans or whatever like that. So I think some of those things put the put a shelf on the idea and even the ability to access some of that capital to be able to build or even think to grow these companies that venture scale firms are wanting to invest in.
Yeah, totally. No, and thanks for sharing that. And I think as we were preparing for this episode, we want to find a healthy tension between, there's some like historical pain here. There's some things that have happened that aren't good, but then like, let's talk about the redemption of that in a really cool way. And so then this like second part of that question then is you're talking about, all right, so given all that, now we're seeing 2014 to 2018, the stat you're sharing, while there's more Black and Latino, Hispanic entrepreneurs, founders kicking up, there's a little bit more of that. And I don't even know if this is fruitful or helpful, but let's not even talk about like the capital piece yet. But I'm sitting here as like a venture capital investor, an angel investor. Why have a diverse portfolio? Like, because I believe there's things that are really unique, like we were talking about. So that part 2 of that question, let's talk about that part. What's cool about that?
Yeah. So for me, this is where the opportunity is for me. And it's a bit of an indictment of the venture capital space because of the opportunity. Take the inequality thing just out of the. Just take that out of the equation and just kind of look at it and saying, well, and this is the biggest indictment for me is that, in 2021, there was like $147 billion in the first half of 2021 being invested in venture entrepreneurs. I mean, the money was cheap.
Yeah.
It was just
stimulus
crazy.
Money's coming. Every company's got a lot of customers.
Yeah.
Awesome.
Yeah. And so, interest rates are, tremendously low.
Yep.
And so money is just pouring in, and the venture space had even gotten loose, given how as much money as you had, as much competition as there were for deals. People weren't doing due diligence. Companies that didn't even have products were having these extremely high valuations.
Totally. Yeah.
But yet you didn't see any movement in the funding percentages. And so I'm looking at that and I'm just like, well, it would seem because venture capital is necessarily a risky asset class.
Yep.
This is not, okay, I want to just preserve it. This is not an annuity. This is not a situation where you're dealing with unsophisticated investors, given the fact that you have to be an accredited person in order to be able to do that. Yeah, but everybody can't put money into this. You gotta have some bread. Okay.
You can't even share what you're doing with certain people.
Absolutely.
Technically, because it's viewed as not accredited. Like there's certain you could get in trouble for that, which is crazy. So we didn't, just for a plug for it, we did an episode with WeFunder. Anybody listening, it's like, what are you guys talking about? We did an episode with WeFunder, which is a Reg CF crowdfunding platform. We dove really deep on what that is. We can put in the show notes or something, but it was back episode 50 or somewhere in there. So if anybody listening, it's like, what the heck are they talking about? Go back to that episode and listen to it. That should be helpful.
Yeah. So you can't, this is purposefully a risky asset class, but you are willing to risk those dollars because of the potentially high returns you can get for taking those risks.
Yeah.
This isn't an S&P index fund that you just put your money in and you're just like, hey, I'm just going to trust that the market over time is going to go up
8 to 12% over a 5 to 10 year period. I'm pretty good. Yeah.
No, you're effectively buying lottery tickets and hoping to say, if I find the right Uber, the right Airbnb, that type of thing, then I'm going to
statistics like 1 in 100. Like a good venture firm is saying, we're going to look at 1 million deals. Well, millions probably high. Like get 1,000 deals this year. Like if I'm sitting there as a due diligence person, a venture capital fund, it's like my job is to vet 1,000 deals a year, invest in 100, and I only need 1 to pop in the next 3 to 5 years, and I'm good. Like that's pretty risky.
Yeah, it's extremely.
I think
risky.
It's changing a little bit where people are trying to get better at it. I think they're kind of saying, no, that's not good, but at the elite levels, it's not.
Yeah, but because it is more art than science, I don't think there's any like great ability to say, hey, if I just do X, Y, and Z, this is going to make me a good investor. Because a lot of this stuff, even is timing. I think about Uber. Uber, they blew up when they did, but imagine if Uber was about to go public right when the pandemic hit. That could have completely tanked their business because, they have a model that can scale to tremendous heights, but it's requiring people to move around and a once in a 3-generation event happens where everybody's sitting at home, that could have completely torpedoed their business. And the business was straight ideas, marketing, all of that could have been perfect, but just, something outside of their control. So it's a tremendously risky asset class. So why are those investors not willing to take the quote unquote risk on these particular founders? Because what you're trying to do is you don't win in this environment by doing what the herd does.
Mm-hmm.
You win. So you have to be right about certain things about the company. If you're just wrong about things about the company, everything's going to go bad.
Yeah.
But it's not just enough to be right. You have to be right and you have to be non-consensus.
Yep.
So that's where the returns come from. Not just being right, but with everybody else.
Yeah. And not being scared of that. Yeah.
Yeah. You're not going to make any money. So if me and you are investing and we're together, that's going to limit how much we're making. But if I'm investing in something that nobody is, I'm going to get a bigger piece of that pie. And that's going to give me the type of return that I'm in this space for. So it seems to me it's counterintuitive that folks in this space would not be looking and saying, hey, where are some places where I can move where other people aren't moving?
Yeah.
And investing in Black and brown and Black and Latino entrepreneurs would seem to me would be a place that obviously everyone's not fishing in those ponds. Why would I not put my rod in that pond? Because that's tremendously non-consensus. And if I have a company that blows up from that, I'm not competing with all these other folks around this because, there's just so few dollars being poured into that. So my valuations are going to be better. I'm going to be able to own a larger percent of the company. I'm not going to get crammed down by Tiger Global or somebody else coming in who have these huge funds. They're going to cram me down. You're going to be able to have greater outcomes if one of these companies blow, which would lend me to think that you would have much more money flowing into these folks than less. So
if we put that in a box, everything you just said,
mm-hmm.
and that becomes a thing for a little bit, is that enough like progress? Because really everything you just said, like if I'm a venture capital person, I can be like, yeah, everything you guys talked about, like systemic racism in America, like inequality, like that stuff, like I could just say, I don't really care about any of that, but
mm-hmm.
man, Derrick, that's a great point. I want to make some money. And basically like, I don't really care about those communities, but I'm gonna do that.
Mm-hmm.
I don't know the answer to this, like, but is that enough of a reason to do it? Or is there a missing piece of it where it's like, and I'm sure there's other reasons, but like, if you just, let me put it this way. You raise 25 million, you guys start a fund, you guys are crushing it. You invest in all these founders, all this stuff. And every LP that you have that invested was like, yeah, it was a great business decision. And nothing really changed in their heart towards people or mm-hmm. founders or communities that are in need and have brokenness and things like inner city communities, the refugee communities, immigrant communities. Like if their heart didn't change towards that in 5-10 years, but they made a ton of money and you're sitting there, do you look back on that and say that was a success? Or do you say, there's other pieces that you would want their heart to be investing for it to make it worth it?
Yeah. So I'll answer that question in a couple of ways. If this thing does blow, is it a success? Then yes, for a couple of different reasons. Number one, part of the vocational aspect of this, not the occupational, but the calling aspect of this is I desire to see more kingdom flourishing. And so if by investing in these underrepresented communities and they have companies that are able to grow to the level that they need to grow to have these types of outsized returns, that will mean they'll be able to have this kind of impact on society that will be pretty tremendous. And if that happens, I have success on two fronts. One, for me, the metrics of success for me is, am I being faithful to what I believe I'm called to do? Yeah. So even if the fund doesn't blow, if I'm being faithful,
so you're being faithful to that.
I'm being faithful. Yeah. So do I say that's a success? Yes, because my measurement is not the numbers, it's am I being faithful? In terms of the fund itself, if all of my LPs just simply say, hey, I just made a buttload of money off of this and I'm good with that, then for me, I'm like, if that was the cost of me being able to help these founders create these companies, blow up to have the type of impact in society, then yes, I'm fine to do that, because I understand that the LPs ultimately are in this to make money.
Totally.
So
Yeah.
if, whatever their reasons and rationales are and whatever they're going to do with the money or whatever like that, have I given them the thing that we've contracted to do or that they've desired for me? If I've done that, then to me, that's a success. But the other piece of it is, and I think that's the underlying aspect of this is, I don't just simply want, or my desire from a vocational or kingdom flourishing space is not just simply to see this fund make a lot of money, or even the individuals who are starting these companies to make a lot of money, because now they can now become like some of those LPs and like, okay, hey, I'm just rich.
The same problem forever.
I'm just rich, but I haven't, I don't, okay, that's just individual stories. And it's, this is a drop in the bucket when you start talking about the inequalities. But given one of the attractive things to me about venture capital in this space is you have people trying to solve big problems that can have tremendous impacts on society. And as I'm looking at how, especially in the United States, how our society is evolving in terms of the ethnic makeup, we're becoming a much more diverse society. And so what would it look like for people who are in the idea phase now to build products that will impact a society that will be look more like those folks who are creating those products, goods, and services? And they're creating those products, goods, and services to impact everyone, including people who look like them.
Yeah.
But to your point, in terms of when you have this diversity of products, you have these diversity of ideas, it's not just the minority communities that will benefit from it, but all of society will benefit.
Totally. Yeah.
Because you have people looking at these problems from different lenses, bringing different perspectives to it, and may attack the problem in a way that that somebody from a different society or a different culture or a different community wouldn't. But it ultimately lends itself to all of society flourishing. Yeah. And if more and more society has that kingdom feel to it, then that, for me, that's a huge win.
Well, and you go back to like entrepreneurs are problem solvers, right? Yeah. That's like one of the main reasons. And so when you say creating a product, like step out of the mindset that product is a widget, and so let's say like a product could be a bank.
Yep.
And there are still issues with our current finance banking system. And so you start finding something, hey, like I'm going to approach this way. Here's a solution. And instead of saying, hey, I'm going to ask my 5 friends at lunch that all look like me and act like me and think like me and are in the same circles, I'm going to ask them all if my bank product works versus, oh, I've got this wide variety it needs to work for. Then you start bumping into things like, oh, well, my bank doesn't work in current American policy for financial institute. Now policy happens and now change happens. And so over time, like just creating a better product doesn't just mean a widget. It means the whole of society functioning, products better for more people. That's going to lead to massive systemic change over time just because we're making a better product. And it forces the people that aren't making good products out, which I think is good. It forced to go back to Uber, taxis were a horrible business model. It was just bad. No one likes getting a taxi. You couldn't pay. It was just a horrible experience. And I feel bad in some ways that their industry blew up. And at the same time, I'm like, well, you should have cared about customer service better. You should have wanted to do better. And Uber swooped in and cared about it. And there's all sorts of issues there. And then, so I think spot on 100% like that kind of impact can happen in cool ways as a result of it.
Yeah, I love the way you frame that, because there's the thing, but then there's all these ancillary pieces that come with the thing. I think about like Starbucks and, putting, coffee or whatever you think of the quality of the coffee now, but making.
Don't let Steph from Prodigy hear this conversation.
Yeah, I know. But the idea was stepping up from Folgers in the can.
Totally.
And having that be a thing. And, the thing swept across the country, but you also had this ancillary benefit of now you have all these stores that are now third places, of places where people can gather and come and work. And, the coffee shop is office, or a place where I can come and it's like a bar type feel to it, that type of thing. Howard Schultz wasn't thinking of that. I think he was just trying to push these coffee beans. But because that product became so ubiquitous, there were some ancillary benefits, again, that benefit society along with it. And so how many of those things that come along with those things when you have companies that are able to scale to that space?
Well, and then I even go to, just because it's the nature we're in, like social enterprise impact stuff, just on your coffee example, that like, I'll bash Folgers. I don't think culturally, societally, people weren't intentional about the products they were buying in the 80s, 90s. And my dad did the bag of Folgers, best part of waking up, Folgers in your cup. And now I'm like, man, that's terrible. That is like the worst part of waking up. But I saw him, he actually took 2 bags most days. He took 2 Folgers bags and dunked them in his big mug. And like, gosh, crazy. Point being, most likely Folgers wasn't caring about the humans in Central America or Africa or Asia that were harvesting those beans. And so Starbucks had to, maybe Starbucks cared a little more, maybe not, maybe they had to catch up. I don't want to go there. But what happened as a result of that is then people started saying, well, if I don't know how Starbucks is sourcing their beans, I'm going to start, this coffee shop idea is cool. I'm gonna start my own coffee roaster because now that's a thing. So Starbucks paved the way for that community space, the third place thing. Now all of a sudden someone's like, oh, I'm going to roast my own beans. And then they're like, oh, there's actually an impact on how those beans are roasted. And then fair trade came along, and fair trade is a questionable thing. And now you got people like, hey, I don't want to be fair trade. I want to be like the, and so you look at we're talking about a 40, 50 year period of all that stuff. But the norm now is to say, well, I hope the norm now is, and I know that it's not actually, but the norm in my bougie coffee circles is like, how are you guys sourcing that? Are you guys paying ethical wages? Are you guys like giving back in the community? Are you doing those things? And so again, it's transformed all that. And if we're just, if 98% of the capital to start organizations like a Starbucks or these big culture changing organizations, if 98% of that is going to people who look a certain way and act a certain way and are from the same circles, we're missing an opportunity to problem solve in a way that's going to change the world. Absolutely. And I think that's the point that you're saying, man, that's cool if that happens and that comes out of it.
Absolutely.
Which maybe we just need to end there. It's like, yeah, mic dropped. Like, let's go. That's awesome.
So let's go. Cool. Let's get it.
Yeah, no, it's awesome. All right, everyone. I want to take a quick break from today's episode and just share a little bit about Impact Foundation, who's got an incredibly awesome model of using impact investment, charitable dollars, and funding tons of projects all over the world right now. But what if your investments could change the world? At Impact Foundation, they believe business with purpose has the power to transform society. Purpose-built for impact investing, Impact Foundation provides a streamlined way to fund businesses that seek social and spiritual transformation or make loans to charity, all while earning a financial return to grow your giving. Donors and investors have already supported more than 200 redemptive enterprises through their impact accounts. They provide needed fuel for companies that exist as a force of God's redemptive work in the world. To learn more about what they're doing in their kingdom impact investing model, visit impactfoundation.org. So maybe this is kind of like I don't know if it's a wrap-up question or not, but let's talk about the capital represented by those communities. So obviously your fund is, hopefully it's going to represent that, but over time, like right now, it's probably mostly capital coming from those traditional communities that we've said have wealth and investing there. Like, don't want that to be the reality. Statistically, we know that that's probably true of the space right now. Flipping that to say, man, why not have the available angel venture capital in the US be representative percentage-wise even of population? We've kind of talked about that. We've talked about some of the issues of that, but like, how does that part change? Because that's not really like, I mean, if your fund is successful, then those people get rich, like you said, and those founders get rich, and then they have money to actually put into there. But we know it's only 1 in 100. And so if I don't know a lot of funds doing what you're trying to do right now. And so that's if it's just you and it's just a few companies that succeed and just that, like we're talking maybe in the course of your career of doing this, you add 10 people to that pool. That's not really going to move the needle. Right. And that's you're a emotionally healthy guy that can handle me saying that. So systemically, how does that blow up to be actually like moving the needle that way? Like what happens?
It's interesting. I think Anderson Consulting, Accenture. I'm sorry, I'm so old. I'm thinking Arthur Anderson.
I was
Anderson,
like, well, dude,
Accenture.
I'm a Milwaukee guy, but went to Marquette there. I was like, I know Anderson Consulting, and I was like, wait, why don't I hear about them anymore? Oh, Accenture.
Yeah,
That's
Accenture.
right.
So Accenture did a pretty extensive study in terms of like how do you address this gap, and it would take like 30 years of intentional investments in order to bring this back, bring this into some sort of equality representative of kind of the demographics in the country. And like I said, it would take some very intentional things to do.
Yeah.
And so, and there is a big problem even on the capital allocator side, where about 1% of the folks writing the checks are Black and about 2% are Hispanic.
Right. That's kind of what we're talking about.
Yeah. So you're not going to grow that because the rate of money being invested into entrepreneurs and the rates of those companies blowing up is not going to be nearly as fast to be able to make this like a self-grown deal where.
Well, and at the same time as you're trying to work, I just thought at the same time you're trying to work on that another 98% of capital is getting invested into the companies founded by those. That's just like,
so you're not going to be able to catch up that way. Yeah. So it will require people who do have the means and do have the resources to create space and bring others like myself. So, I'm not a founder who had a huge exit, but I was brought on by RVC to be a general partner in this fund. Mm-hmm. Those are things that people can do now because it's not something that I want to be careful. You got to have some thinking aptitude to do this.
Yeah.
But it's not like being a doctor where you got to have 8 years of medical school in order to do it. Because it's some skill, but it's a lot art. So the barriers to come into this from a credentialing standpoint are very low.
Yeah.
The barrier to get in is you got to have some money.
Quick plug for a future podcast on how broken our education system is for a later conversation.
Okay. Yep. But because the credentialing barrier is so low, it should be very easy for people to say, hey, come on in. I'll teach you this, do that. The barrier to entry is, do you have the capital to allocate? And the people who have the money will have to open their hand and say, I'm going to create space and opportunity for folks who don't look like me to participate in this space. But again, I go back to, if the motive is just naked capitalism in terms of like, I'm just trying to make as much money as I can, then this is a way to try to go about doing it. And a fairly, it's not even sophisticated for me because I'm like, don't you see the opportunity? But I think it's a legitimate bet to make if you're just truly just trying to make money. So it's not like you're doing charity work.
Yeah, totally. No, 100%.
But if you're chasing the dollar, then this would be a fantastic way even to bring people in on the check writing side, because that will give you more exposure to a diverse set of thinking in terms of who are the companies that we need to see.
Yeah.
Or even after you've invested in those companies, in saying, hey, I understand some things about the market, given what the U.S. population is going to be coming. So I can understand some things about this consumer market that maybe you don't. Totally. Because the consumer market 100%. Is going to look more like me or people who are have the experiences that I have than what you have. And so if you're building products and services to address that consumer market, you can develop some sophistication there. So it would make a lot of sense, but it would take folks who have the money to see that as an opportunity and open their hand to do it. But the word that I will go back to is the word about intentionality.
Yeah.
Without that intentionality, it's not going to, because the gap is so wide, it's not going to happen. And it won't just happen by investing, having a couple of funds and a couple of founders really explode, and then they turn into that capital allocators.
And, man, I mean, in some ways, everything you just said feels a little hopeless. A lot of what we talk about is hopeful, you know? And so I'm just putting myself in the shoes, trying to think, okay, if I'm a Black, Latino, Hispanic, founder or just individual, and I'm thinking about this and I'm like, wow, there's this gap and here's the statistics and that would all have to happen. That's pretty unrealistic. And it's a accentuated study and it's like a 30 years of like perfect intentionality. I'm sitting here like, man, so what's like I could see getting like just a little jaded and just being like, all right, well, what's the point? I'm going to take care of me, do my best. And maybe I'm one of those off ones and whatever. So maybe how we can close out this conversation is like, what's the message of hope there? So recognizing, man, massive mountain to climb, can't change the past. We can recognize the past. We're not going to change it. We're not going to wallow in it. There's cool guys like you doing this stuff. There's hopefully other ones. We're preaching intentionality. We have a kingdom hope. But like, as we close out here, like, yeah, what's the message of hope there? That's like, yeah, it's a mountain, but here's what we're doing. And here's what it can look like.
Yeah. I would say two things. I'll give my personal, what undergirds me in this space.
Good.
But then I think there's a more general thing. And I guess they both kind of blend together. In general, I say, and I truly believe this, is that you do righteous things because that's the righteous thing to do. You don't do righteous things from the standpoint of how it will pay off. Because doing and moving and acting righteously sometimes does not pay off. Or alternatively, it comes with a lot of downside. But if it's the right thing to do, and it's a good and noble thing to do, then you do it because it's good and noble, not for what you're going to get from it. And I think that is really, really tremendously freeing, regardless of what your background or what you're rooted in, because that removes the hanging on to the metrics of, but did it happen in my lifetime, or did things go as well as I desired them to go and whatnot? Because the reality is that's
a good word.
As an individual, there's only but so much you're going to be able to do.
Totally.
And there's so many things and so much of this world that's so far out of your control that you could legitimately take the tack to say, I'm one person, what can I do? So I'll just turtle up and do nothing. But I'm like, that's really defeatist and that's not really helpful. But I'm like, you can get up every day and just say, I'm just going to try to move the ball forward one step. And if I do that, and if I'm faithful to do that, and I'm moving that ball forward in a way that's uplifting and growing, then you can look back on your life and say, what I did mattered, what I did had purpose, what I did affected the community around me, regardless of whether or how large or how much impact it had in the world. The reality is you could have made tremendous impact in your lifetime, and then you die, and then everything, dies on the vine, and then nobody even knows that you did anything 20 years later. So it's like, don't pursuing that. So that's kind of the general revelation.
Yeah, no, that's good. That's good.
The specific for me is that, again, my hope is I want to see the world flourish and look kingdom-like, but if it doesn't happen in my lifetime, cool, because my hope and what I'm grounded in and my faith is not simply what this will look like, but understanding that there's more going on and there's more to the story. And I have a sense of what the story is going to end like. So given that, then I don't have to put all my hope in saying, man, I just grinded for 20 years and this thing is the percentages has gone from 2% to 3%, or man, I only saw one company really blow up. It's like, well, I know how the story ends for me. And so, even if it doesn't turn out great for me in this space, then when I'm looking from an eternal perspective, I'm like, ultimately it's going to all be made new. And so it was worth doing it again, because it was righteous. I'll let the results be handled by somebody who has the ability to really control and make the thing happen the way we want it to happen.
Totally. Yeah. 100%. And with that, I mean, you look at history, you look back 20, 30, 50 years, you can see, oh man, there were some change makers. There's some people pushing the boundaries, and stuff is different now. in a cool way. Might not be where it is, like God, for me, like for ours, like I don't know if it's our vision or whatever, but it's like to see God redeem as much of the global economy for his good as he wants to before he returns. And I don't know if we're at 2% now or 5% now. And I don't know if we're going to be at 50% now, but I know on that day that's what's going to happen. And I think, we just press forward for that. And the sense of justice in us might be like, yeah, but that needs to be 50%. Like that's representative. That's not helpful. What's helpful is saying, no, we're pushing that forward. And so, yeah, I'm with you. I think that's a really good word. And yeah, man, well, I'm stoked about what you're doing. If people want to hear about what you guys are doing, if they want to learn about what you're doing, get involved. This isn't a solicitation or anything, but if they just like, man, I love what Derrick's saying, I want to talk, like how do they get in touch with you, or what do they look up?
Yep. Yeah. You can find me on LinkedIn, Derrick Kelsey, or email me about the fund specifically at Derrick, DERRICK at Rockies Venture Fund, ROCKIES venturefund.com. And shoot me an email there. And would love to talk with you, share more about what we have going on, and see how we could potentially partner together toward this effort. So.
Yeah, it's awesome. Well, cool, man. Thanks for the work you're doing. I'm stoked about it. And I hope it's a regular conversation. I'm constantly meeting people doing that over the next few years. And we're in your corner cheering for you. And thanks for having an awesome conversation.
I really enjoyed it. Thanks for having me on, Ryan.
All right, everyone. Thank you for listening to another week of the Feast Over Famine podcast. We are so thankful you guys are here and listening. As always, hit that subscribe button on your favorite podcast listening apps. We would love to keep you guys up to date on new episodes that are coming out, when we're launching new episodes, when we're launching new seasons, and everything in between. So when we're in season, episodes are dropping every single Wednesday. Hit that subscribe button. Make sure you're up to date. Also, if you're loving what we're doing, be sure to follow us on Facebook, Instagram, LinkedIn, where we're constantly posting about our projects, what they're doing, what kinds of things we're working on. We'll recycle some podcasts, things about our partners, all sorts of fun stuff that you want to see. So hit us up on Facebook, Instagram, LinkedIn, all that kind of stuff, and check out what we're doing there. And yeah, we're stoked that you guys are listening. We hope this has been really fruitful, and we will catch you guys next week. And lastly, as you guys all know, we always talk about all sorts of things with impact investing, investment opportunities, entity structure modeling, how projects are getting capital. And as a disclaimer and a reminder, Feast Over Famine does not provide legal, tax, accounting, or other professional advice. You should consult professional advisors concerning the legal, tax, or accounting consequences of any activities related to your project or a project you're supporting. Feast Over Famine doesn't consult, advise, or assist with the offer or sale of securities in any capital raising transaction. We don't do that for the direct or indirect promotion or maintenance of a market for any securities. And Feast Over Famine does not engage in any activities for which an investment advisor's registration or license is required under the U.S. Investment Advisors Act of 1940 or under any other applicable federal or state law, or for which a broker's or dealer's registration or license is required under the U.S. Securities Exchange Act of 1934 or under any other applicable federal or state law. So there's your investment disclaimer. Hopefully that's helpful if you need it. And if you ever have any questions on that side of things, don't hesitate to reach out to us. Take care.